All righty. And we are live. What's up, everybody? Welcome to Own the Chaos. My name is Brad. The stock market is crazy and chaotic. And I made it my mission to help you own it. It's Stock Watch Sunday. So you know what it is. I'm going to give you a snapshot of what I think we're going to be looking at for the market in the week ahead. Obviously, a little bit of a different setting than you're used to, but I'll be back in the studio tomorrow. So no worries there. But guys, what's going on? How you guys doing? How you feeling? What are you thinking about the market? I already put a poll in the chat as well. Make sure you guys check that out. Also, before we get into anything, make sure you're hitting that link in the description or the join button. If you guys want to become part of the Chaos crew, every day before the market opens, I put up 5 stocks that I think are worth watching. I give a nice fundamental and technical breakdown on all of those. So if you want to become part of the Chaos crew and get access to our Discord and all kinds of other goodies, make sure you're hitting that join button next to subscribe, or there is a link in the chat as well as you guys are rolling in. But guys, there's a lot to talk about, especially revolving around inflation and what could be causing this increase in inflation. Every time we think that we're kind of getting through this hump, something else gets in the way. And so I'm going to reveal what that is, right, that just happened over the weekend that I think could impact things in the future, no matter what the Fed actually does, unfortunately. Also, I have top stocks that I'm going to be watching throughout the week this week, so make sure you guys are sticking around for that as well. We're still in the thick of earnings season, so I have a lot to cover on that end too. Before we get into anything, though, let me welcome everybody, or welcome to Starting Five. What's up, Alan? 316, Lick Jane, Jeff Ponica, Philip Stroh, and Tracy H. You guys are our Starting Five. If you missed the Starting Five, you didn't make it in there, it's probably because you didn't hit the subscribe button or the notification bell. So guys, if you haven't done so already, make sure you hit that subscribe and that notification bell as I go live every Sunday at 7:30 p.m. Eastern time. I also go live at 3:45 p.m. Eastern time, Monday through Thursday, to cover all the market events as well as react to earnings if there are any. And this week, we still have plenty of those to come as well. We welcome a few other people that are in here. All right. What's up? India and wheat. Maltagoya hit the nail on the head. We're going to be talking about that. That's for sure. Can't wait for diesel shortages. Interesting. To increase inflation. I'm tired of paying my fair share. Yeah, no kidding. Everything's crashing and burning, says Blueberry Freddy. Let's see here. Maybe not on the Starting Five, but I'm on the bench, says Stop Console Wars. Yeah, absolutely. Hey, listen, if you're here, you're here. Ryan Rose says, hope everybody had a beautiful weekend. I hope you did too, Ryan. Definitely did myself. And let's get into it. So yeah, Maltagoya hit it on the head. It's wheat prices. So if you guys didn't check this out, India is banning wheat exports. And India, one of the largest exporter of wheat in the world. Obviously we saw a really big shortage or potential shortage and inflation increases because of the Russia-Ukraine situation. Russia-Ukraine responsible for about 12 to 14% of the world's wheat supply, obviously a large exporter of that commodity too. And we saw how that stocks related to that skyrocketed, and they've pulled back some, but I think that we could see another move up in that. And so I'm going to give you some stocks in just a minute that I think are worth taking a look at that could have a nice little run back up as a result of all this. Now, obviously, this isn't great for inflation, and it isn't great for the economy for obvious reasons. We could continue to see this issue with inflation continue to be a problem, and it really has nothing to do with whatever the Fed's doing. The real big issue here as of late has been, the Fed's behind on everything. They're going to be the ones that they need to be the ones that tamp down inflation, and they can to a certain extent, but there's nothing they can do about issues going on in India, right? They can't do anything about the war in Ukraine. Those are going to continue to inflate prices on those products and everything that has to do with wheat. That goes all the way to bread, pastas, beer. Your beer is going to get more expensive. So this is going to continue to be an ongoing thing no matter what the Fed does, unfortunately. this probably wouldn't have been a big deal had there not been a war already. But because of what's going on in India, and there's an interesting dynamic here too. And I'm just going to put my tinfoil hat on. I know that you guys, every once in a while, you kind of chuckle when I do this. But my thing is, you know, India has kind of been buddying up to Russia. And, we saw that with when it came down to oil and where India was going to buy their oil from. A lot of other countries said that they weren't going to buy oil from Russia, and India was like, "Hey, you want to sell us your oil? We'll take it." Right, and so there was a little bit more of a better relationship between Indians and Russians, or India and Russia, and I think that maybe this has something to do with it. Maybe it doesn't, but the reasoning that they're bringing because of why they're banning wheat exports has a lot to do with the weather. Apparently, there's an extreme heat wave, and that's what's causing the issue. Global suppliers are banking on the world's second biggest wheat producer, which is India. This is according to CNBC. For supplies after exports from the Black Sea, the region plunged following Russia's invasion of Ukraine. Prior to the ban, India was targeting to ship about 10 million tons of wheat this year. And this could drive up global prices to new peaks and hit poor consumers in Asia and Africa. This could also carry on over to us as well. And so how does this affect us tomorrow? And what can we do about it as investors? How can we make this trade work for us? Listen, we've talked about this before. It sucks when you're dealing with issues revolving around the global climate, whether it's geopolitical or otherwise, and it's unfortunate. But I wouldn't be doing my job if I didn't point out certain areas that you could actually, use to your benefit as an investor. So we're going to do that. I'm going to share with you my screen here real quick. Let me pull up a couple of stocks that I think are worth taking a look at as a result of what might be going on in India and this export ban. The first stock, I guess I should say ETF, that's worth taking a look at is none other than ticker symbol WEAT, which is the wheat ETF. So let's go ahead and I'll share my screen with you. There we go. So there you have it. This is the wheat ETF. This is the ETF based off of wheat futures and the commodities. And so you can see that this chart's obviously been going absolutely insane over the last several months because of what happened with Russia, Ukraine, and now the second, largest importer is putting a ban on wheat. So I would imagine that we continue to see this run up. So that's your ETF. But what about if you're interested in more individual stocks revolving around this issue with wheat supply? You could take a look at something like RKDA. If you guys aren't familiar with this company, they are directly, I wouldn't say directly, but they have a lot to do with the wheat supply. They're involved in farm economics and aim to increase crop productivity, focusing primarily on hemp, wheat, and soybean. The agricultural biotechnology firm is headquartered in Davis, California. So as issues become more prevalent in Asia and Europe, RKDA could have a decent move because the demand is going to come to a lot of the European companies or countries and companies related in Europe and in the US as issues in Asia and Eastern Europe become more and more of a problem. So you can see that the stock right now has had a pretty decent move back down to just $1 after spiking all the way up to $2.66. This could have a really strong move opening up tomorrow. And I think it probably ends up continuing. This could be a multi-day runner. We saw this actually have a pretty decent day on Friday, as pretty much everything did. It was up 18%. And could you be chasing this at this point? Maybe, perhaps. But I think that, so just take this into consideration. RKDA actually had a strong move before India announced this shortage. You can make speculations as to whether or not maybe this move was made because there was a lot of investors that anticipated this before India actually made the announcement. But I think, looking at this, RKDA certainly seems like a really good opportunity, especially if you're looking for something on the cheap. And I really think that this makes a pretty strong move. You wouldn't be chasing it, in my opinion, and I think that there's a lot of opportunity there. Look, another one, in my opinion, that I think also would be worth taking a look at is AGRO. Um, you know, and that's one that certainly come down to touch the 200-day moving average. It's gotten pretty close to being oversold. Not quite there yet, but obviously had a pretty decent move off of the bounce on Thursday. Closed the day just up 1.25% on Friday, but obviously lots of room for this run. It's had recent highs of 1355, and again, that's without India coming into play here. So I think this could have the ability or the potential to go back to those highs as well. Um, One other one that I thought was interesting. There's a couple of other ones that I think are worth watching, but Archer Daniels also related to the agricultural, you know, industry, particularly as it deals with wheat. This one, in my opinion, certainly has the ability to make a pretty decent bounce as well, for all the same reasons. Take your pick at this point. This is trading at a forward PE of 13 times next year's earnings. So well below where we're at with the S&P 500, which is around 18, 17, 18, and probably a little bit higher than that after Friday's move. And there's a couple other ones. I mean, Bungie, I think you probably have heard of this one. There's a lot of folks, a lot of talking heads on CNBC that have talked about Bungie as well. I don't know who everybody pronounces it different. Is it Bungie? Is it Bungie? Who knows? But it's this is trading at just 8.5 times next year's earnings. And you can see on the chart as well that this fell below the 50-day moving average, but it's way off the 200. I think this also sees a pretty decent bounce. It may have gotten away ahead of itself a little bit, but given the fact that this is still just trading at 8.5 times next year's earnings, we're still dealing with not just wheat issues, but also corn and other commodities as well. There could be a huge food shortage issue going into the summer months. And I think that, in my opinion, that companies like Bungie, AGRO, Arcadia, Anderson's, Archer Daniels, they all could have some really strong moves, not just tomorrow, but going forward. And so, in my opinion, I think these are ones definitely worth taking a look at. 76 of you guys hanging in here for Stock Watch Sunday. I certainly appreciate it. If you guys wouldn't mind hitting that thumbs up and subscribing if you're not already, I certainly would appreciate it. Let me see what you guys are chatting about here. I like the penny stock named RKDA for exactly this. Yes. I think that RKDA certainly could make a decent move for sure. Alan says, my beer gets a higher price. I'm going to be pissed. That's hilarious. Okay. A couple other ones. Interesting. So would you be honest about how much money you've lost on Penn? I think it would be helpful. A lot of us newbies who have lost money this year as well. I've lost a shit ton of money on Penn. I don't think I've really hidden that. And I'm very transparent about it within our Chaos crew as well. So if you were a part of the Chaos crew, you'd know that. I've lost a ton. I mean, I initially started buying Penn and holding on to it in the 80s. And obviously it's down in the 20s. So I'm not changing my conviction on Penn National. I've also added to it and averaged down. So dollar cost averaging has helped my average on Penn National. But, I'm not going to shy away from that. I've lost a lot, but it's unrealized gains. I'm going to continue to hold on to that well into next year. And I think that I have no reason to sell right now. I mean, Penn National is the only company right now that has paved a way for profitability as it relates to sports betting, and they have the advantage over everybody else, in my opinion. A lot of other companies can take up market share, but it means absolutely dog shit if they can't turn it into profit. So, in my opinion, Penn's the one to own. Still not changing my stance on that. So, I don't know if that was like a dig to try to, rise me up, get a rise out of me, but that's not going to happen, for one. And for two, I've always been pretty transparent on what I've been good at making trades on and what I haven't been. That's just who I am. Okay. Snookeroo says, I don't trust this market. I am in and out. And I think that that's where a lot of people also could relate to as well. I mean, you look at the way the market's been, it's super volatile. Every nice little rally we've seen has been sold into. Now, right now, I'm looking at futures, and let me just refresh it right now. Oops, let me see real quick. Um, Futures right now, Dow's up 110 points, S&P is up 16, which is good for almost a 0.5%. The Nasdaq's up over 0.5%, up 78 points. Oil's up 74 cents, up to $111 a barrel. That's WTI crude. And so maybe we see this carry on. But one of the themes that we've seen in the overall market, to Snookeroo's point, is that we've seen these little gap ups and then everything sells off. Now, Friday was an absolutely great day. Could we have seen the actual bounce there? Is that going to be the low that we saw on Thursday? Maybe, maybe not. I'm not really willing to kind of make that call. I've tried to do that earlier this year and it just didn't work out. So I'm not willing to make that call until we're well into a decent rally. Right now, it's too early to make that call. And we'll just kind of have to wait and see. For one of the big reasons that I've just laid out to you as far as this wheat issue and how it's going to impact the economy, I think maybe a lot of people don't realize just how impactful that'll be, not just to the U.S. economy, but the global economy as well. So there's a lot of moving parts. There's a lot of headwinds here. You also still have the Fed that seems to be very hawkish and wants to bring interest rates up to at least 2.25% or maybe 2% by the end of the year. And we're just going to have to wait and see. Do I think that we've priced in a lot? If you guys caught last Stock Watch Sunday, I kind of laid it out for you that I felt as if the stock market had priced in too much. I mean, given the multiple we were at on the S&P 500, that would be equivalent to what we saw in the 90s all the way up to 2010, where interest rates, the 10-year interest rates, the 10-year treasury, I should say, was up around 5%. We're barely into 3% right now. And actually the 10-year fell below 3% on Friday. And we're at that same multiple in the S&P 500, around 17 to 18 times. So if we take that into consideration, I think that we have swung the pendulum too far in one direction to the bear side. So I think that we do see a pretty decent bounce. The consumer is still very strong. We've obviously seen a lot of numbers coming out of the travel industry that indicate that people just don't care. They're going to spend the money to get out there and do what they want to do. There's a lot of surveys out there that contradict this, but the numbers don't lie. People are out there spending money. Whatever happens in 2023, there's already people speculating about that. But the second half of this year, I think we could see a pretty decent move to the upside. I've been talking about that since January. The one thing that I did get wrong was the move down. I thought we were only going to see maybe around 10% down on the S&P 500. Obviously, we're down 20%. So not quite, a little bit stronger of a move to the downside than I actually thought. But nevertheless, I think that we still are on track to have a decent second half of the year. Maybe we end the year on a green note. We'll see. But actually, you know what? Let me check in on the poll we put in the chat as well. And it's actually 50-50 right now. So if you guys didn't check it out, make sure you participate in tonight's poll. Futures are firmly in the green right now. Do we stay that way tomorrow? And it is a damn near 50-50 split. 51% of you out of the 74 that's voted said yes, and 49 said no. So we're about halfway through. I'll let you guys know how that poll ends up as we get towards the end of the show. But we still got plenty of things to talk about here, everybody. So we'll get on to it. As I mentioned earlier at the top of the show, we have earnings that are still very much in play this week. And I think that there's a lot to kind of go over. Now, this watch list that I'm going to be giving you here isn't necessarily a buy list, and I've always kind of been very transparent about this, but it's definitely something worth watching for. I just looking at some of the comments here. And so this is more of, hey, let's just watch and wait and see how this all plays out. So my first one, and I'll bring the chart back up here. My first one is going to be Walmart. Let me bring Walmart up. And then my notes on Walmart. Okay, so Walmart's earnings are on Tuesday before the open. And so I won't be reacting to those live, but I will give my thoughts and opinions on that on Tuesday afternoon at 3:45 p.m. Eastern time. So make sure that you are tuning into that. Their estimated earnings per share are at $1.47, and estimated revenues around $138.84 billion. One of the big reasons why we saw Walmart have this huge run was because of fears of a recession. You can see that this is outperforming the S&P 500. It's outperforming the entire market because a lot of, when there's a lot of fear of recession around, investors look towards things like Walmart. If you are a consumer and you're worried about spending, you're going to go buy things that are cheap, and Walmart has a lot of cheap shit. And so I think that that's why we saw the huge move on this. This was actually a really great call for our chaos crew and the watch list. If you guys aren't a part of that watch list, again, I encourage you to check out that link in the chat. Each and every morning, I put out a watch list of stocks that I think are worth watching and give my thoughts and opinions on each one fundamentally. And I give my technical analysis on those as well. So if you guys want to check that out and be a part of the chaos crew, again, you can hit the join button next to subscribe or check out the link in the chat or the description. Some of you guys can't see the join button, and I guess it depends on what part of the world you're from or what platform you're using to watch this stream on. But I think, if you go check that out, again, I put a watch list out every morning before the market opens, but you also get access to our Discord group and all kinds of other good stuff. It's tons of value there for $4.99 a month. You just can't beat it. Nobody else is giving that away for that kind of money, but it helps support the channel, helps keep me going. And I certainly would appreciate that support. Again, looking at Walmart. So this is something that I think is certainly worth watching for. I think the bar has actually been set pretty high. The expectations for Walmart having these crazy earnings is a little bit premature, in my opinion. And you can see that maybe this pullback from 160 all the way down to 148 could give itself an opportunity, but I'm not so sure just yet. I think that this is something that I would probably wait and see how Walmart's earnings play out. And one of the big reasons is just because I think it's just gotten way too ahead of itself. You look at the forward PE on this. This is trading at 22 times next year's earnings. So not terribly expensive. And maybe this was just catching up with the rest of the market because it had not really moved all that much for the better part of a year. I mean, you can see this is the daily chart right now. Let me bring it out to the weekly just to kind of give you an idea. So I had actually marked on the weekly this wedge that we actually broke out of for about 3 weeks on Walmart. And I have a couple areas of support and resistance here marked. I think that there's an opportunity, to see or possibility that Walmart comes back to test that 142 area for support before we actually make another move back up. For the last 3 weeks, it's obviously moved down with the rest of the market. And so I think that looking at this, it's just going to be really tricky with those earnings coming up and the bar being set so high. I'm just a little bit worried about it. And that's why I kind of prefer not to go after Walmart, but actually go after Target instead. I think that Target's going to be the better one to take a look at because it's not anywhere near its all-time highs. Walmart smashed all-time highs for 3 to 4 weeks straight. 3 or 4 weeks straight. And that was Walmart. Target, obviously, in the same industry as far as big box stores are concerned. They have earnings on Wednesday before the market opens. They have estimated earnings per share at $3.05, $24.242 billion in revenue is the expectation there. I have the same concerns. I think that consumers obviously are still going to be doing well. And I think that there's going to be, I wouldn't be surprised if they came in and beat the revenue number. But as we've seen for the entire earnings season so far, revenue beats haven't been the problem. It's been earnings and guidance because of the associated costs due to inflation, materials, and even being competitive in salaries. We saw 2 weeks ago, where the PPI numbers came in, production was down, and then wages were up. So again, the preliminary ingredients for stagflation. And we're looking at Target, and I think that there's definitely a possibility that we could see something along those same lines. That's Walmart and Target combined. But aside from all that, Target, I think, has just a lot more upside. 268.98 were all-time highs for Target. And they actually absolutely smashed earnings last go around and gave incredible guidance. And so I think that there's a lot of opportunity here. They obviously have that partnership with Ulta that's continuing to grow. And so for Target, I think that if we're looking at big box stores, if you're looking to have this in your portfolio, that in my opinion, Target is going to be one that would probably be the better one to go after as far as looking at these big box stores. Some people really love their Costco, and Costco is great if you've been owning it for a long time. Obviously, it's had a pretty decent pullback. I still probably would stay away from Costco. Just my 2 cents. I would be really nervous about this if I was looking to just buy it and I didn't own it. If you still own it, I think that staying in it is fine. You want a dollar cost average a little bit, fine, whatever, depending on how long you've been in. Costco is still an incredible company. It's a great long-term investment. I just think there's better opportunities out there, and I think Target's probably the best one in this space. So yeah, that's Target. Again, earnings are on Wednesday before earnings. The next one, I'm going back and going back to the beginning of the week here a little bit. Take-Two Interactive has earnings on tomorrow. Tomorrow they have earnings, and this has been an interesting one because if you guys don't know, TTWO is the ticker symbol. Take-Two Interactive is Grand Theft Auto, those types of names, 2K Sports, video games is the industry that we're talking about with Take-Two. They had not so great earnings last go around, and the stock obviously has moved down because of that. EA Sports came in and had mixed results as far as their earnings last week. If you guys caught that, we reacted to those earnings as they came out after hours. But it was interesting. They gave guidance that wasn't as bad as what people were expecting. And Take-Two is also acquiring EA Sports, if I'm not mistaken. And feel free to correct me on that if I'm wrong, but I'm pretty sure that's who's acquiring them. So Take-Two, I think, certainly has the ability to make a decent move going into earnings, especially since how far this has come down. This is one of those situations where, and I've been talking about this a lot lately, that it's so bad that now it's actually good. And I think that's the kind of scenario we're seeing with Take-Two. Incredible company. They're operating, with decent profit. They're expected $1.04 per share going into these earnings. $882.1 million is the consensus there on revenue as well. I'm not sure they come in and actually beat this, but if they come in and do better than what people are expecting, what investors are expecting, then I think the stock could still go up. Again, I think this is one of those things where it's just so bad it's good. And I mean, we're talking about a stock that is profitable. So in this environment where we're seeing a rise in rates, even though there's potentially a slowing of growth here, the stock was trading at $214. So down, 50+% from its highs that we saw just back in February of last year. Fundamentally, it's just trading at 22 times next year's earnings. So a little bit on the expensive side still, even with this pullback, which is absolutely insane to say. But, looking at this is the stock you want, a stock that's been beaten down, that is profitable. They have a story moving forward. And, look, is there other companies out there that maybe have a growth story as well that are profitable? Yes. But in this situation with Take-Two, I think it's worth a shot taking a look at. I'm not saying you have to own it before earnings. And actually, I would say that I would wait till after earnings come out to see how this moves. Because even if it moves up, people, right? I just got done telling you that it's down 50% from its highs. So you have plenty of time to get into Take-Two. If they come in and smash earnings and the outlook is incredible, then I think that you still have an opportunity to get into this after those earnings. The downside risk here is if they come in and talk about a slowing of growth and they do terrible, then this could break those recent lows that we saw at $101.85. So to me, I think the risk reward here is still pretty high, even though it's come down a ton and it is oversold on RSI. This one we want to be careful with because let's just say it goes up 10% after earnings, right? Even 20. Let's just go 20. You still have plenty of room for this to go to the upside. I mean, we're looking at support resistance all the way up to $144. I can't imagine they come in with earnings that cause this stock to just go screaming up to that level again. So even from where it's at 109 to 144, I mean, we got plenty of runway here that you can get in after earnings, even if they come in and smash them, and you're not necessarily chasing it, right? So I think Take-Two is a good one, and it's going to come down the guidance with this, but it's just been beaten down so much, and they are a profitable company that I think it's worth taking a look at. All right. So next we have Home Depot. It's that week for those big box stores. Home Depot, I like over Lowe's just because of from the builder side of things, and obviously it's had a really strong pullback as well. Forward PE on this is 18 times next year's earnings. This is a stock, in my opinion, that has been absolutely beaten down because of the fear on slowing of growth and what have you. But the fact of the matter is that even though we've seen a little bit of a slowdown in demand on home buying, there's still a shit ton of people that have bought homes that still need to improve their house. I mean, let's just say, how many people went and just bought a fixer upper because that's all they had? And so they need to fix up their houses. This is just me being speculative in nature as far as that's concerned. But I think that this has been beaten down so much that it looks like a really good opportunity. I'm not saying that going back to 420 anytime soon, but I think that this is a really good opportunity to even get in before earnings. I'm not usually one to say that too often, but the risk reward here, I still think it's quite good even before earnings if you decide to take a shot there. Not saying that you have to buy it or you should buy it. I'm not a financial advisor by any means, but it is my opinion that I think that Home Depot could be a solid mover if you get in before earnings and even after. Like there's no shame in getting to this after earnings as well. Estimated earnings per share $3.67, $36.64 billion in revenue. I'm going to go out on a limb here. I think they beat. I think they beat on earnings per share. I think they beat on revenue, and I think they actually raised guidance as well. Earnings last time around weren't great. They talked about a slowing of growth there, but you're comparing it to 2020 and 2021, a time where there was a lot of people that were at home and they had nothing better to do. I think the further away that we get from the pandemic, the better that these companies are going to look because they're going to have comps that are actually reasonable. A lot of these investors are looking at comps that were in the growth that they saw during the pandemic and somehow treating these stocks as if that should just continue, which is absolutely silly. But I do think that Home Depot comes in and smashes those earnings. I think they raise guidance, and I think that we could see this maybe test that 50-day moving average again up around 310, 312. So that's Home Depot. Why would I choose this over Lowe's? Honestly, pick one, in my opinion. I think that Home Depot is a better one, just based off of their balance sheet, the size of the company, all kinds of other things that probably don't mean a whole lot to you. But if you prefer one over the other, I think they're both going to do well. Home Depot has earnings that come out on here we go, Tuesday before the market opens on Tuesday. So keep an eye on that if that's something that you guys are interested in as well. I beat you to it, or maybe you beat me to it, Snookeroo. But that's when they come out. Okay, just checking in with you guys on some of the comments here. Oliver Thorpe says, I really want to get more of Google and Amazon at these prices. We'll be nibbling soon starting this week. But I think buying in stages. There's his comment there. I got one more stock that I'm going to be covering that are coming up this week, but I just wanted to pause and give you guys my thoughts on this. I think this is the right way to go about it. There's some narratives that are out there right now that are starting to get to a point to where they're talking about Google or Alphabet, I should say, Facebook, Apple, kind of returning to this. How do I put it? What we saw back in 2000 with the dot-com bubble. And to me, the crazy multiples that we saw in 2000, it's like some of these people are talking as if they lived through it, and most of them didn't. And I'm not going to sit here and pretend like I did either. But if you just do a little study on history here, the tech companies that came out of the dot-com bubble were the Amazons, Apples, Microsofts, and they continued to absolutely crush it. And they worked their way into that multiple. During the dot-com bubble, there was hardly anything, or I wouldn't say hardly anything. There were so many publicly traded companies that had no business. They had no business plan. They just had a website, and people bought the shit out of them because everybody's like, "Oh my God, the internet! It's amazing." That's not the same situation here. And so, Alphabet's trading at 19 times, 20 times next year's earnings, 20 times. Alphabet wasn't trading at that then. It was trading much higher. So Facebook as well. Facebook came obviously way later. It wasn't part of the dot-com bubble, but that's trading at 14 times next year's earnings. I mean, give me a break here. To me, I think that these stocks are going to do fine. They're continuing to grow. Earnings are what they are, especially when you're comparing it to what we saw during the pandemic. We're not going to see that kind of growth, maybe ever again. So comparing it to those, the comps are just ridiculous in my opinion. I thought it was very interesting to see that Alphabet came down at the touch 2200. And I think that maybe we see this, you can see that it actually tested that a resistance around 2350. So watch for this to make another move up above that, especially if tomorrow stays green. Alphabet could make some really strong moves, Oliver. So I like the strategy there. I like that you're nibbling at it a little bit at a time. I agree. I think that that's probably the way to go. Um, if we're just talking among friends. All right. So lastly, we have Applied Materials that have earnings this week. The semiconductor space has gotten absolutely hammered. I mean, just absolutely crushed. This is now trading at 13, 14 times next year's earnings. This is one stock that one of the three stocks that I thought at the beginning of the year, if you guys caught my January video, I put three stocks that I thought were worth buying at the beginning of the year. Applied Materials was one of them. This is one of the few semiconductor plays that kind of flies under the radar. It doesn't have a crazy high multiple. And, for a while, it seemed as if that was going to continue to be the theme for all the way up to January 14th. This got up to $167 a share. It ripped out of this sideways channel that it lived in for the better part of 6-7 months, then really started to break out of it. And I was like, okay, cool. We're really starting to make a move on Applied Materials. I think it's going to continue to do well. Finally work its way into being an appropriate valuation. And then obviously everything fell off, just like all of the other semiconductors. NVIDIA did, AMD did, all of them. Qualcomm, they all made the move down. Applied Materials, I think, is still one that is at a reasonable level as far as value is concerned. Their expected earnings per share is at $1.90, $6.37 billion in revenue. And I think they come in and actually beat those as well. I think they raised guidance. I think that they have a similar sentiment that that AMD did. If you guys recall 2 weeks ago, we responded to those AMD earnings and they were amazing. Raised guidance, earnings beat across the board. There was nothing really to be worried about. And even with the crazy downturns that we saw over the last couple weeks, AMD has been holding its own too. It's been holding above that $84 support, starting to make a little bit of a turn. And we can see that a little bit with AMAT as well. So Applied Materials definitely going to be the one to watch for. I would say that, support here could be, if it can hold up above 108, we should be good on Applied Materials if we indeed saw the bottom here. And it's crazy undervalued. 13, 14 times next year's earnings on a semiconductor play is, I don't want to say unheard of, but it's rare. And there's not a lot of them that are out there. Qualcomm, I think, is close to that, but not anywhere near 13, 14. It's in the teens, but this, when you're comparing it to like AMD or NVIDIA that are still very high multiple, this is on the cheap side. So I think this is certainly one worth watching. They have earnings that we'll be reacting to on Thursday after hours. So keep your eye out on this one. A couple other ones that are worth noting as well on earnings that we can certainly make note of. And again, guys, I'll be reacting to these earnings all week as per the usual. So make sure you're hitting that subscribe button, hit that notification bell to get notified when I go live at 3:45 p.m. Eastern time. And a couple other ones that I wanted to kind of just honorable mentions, if you will. We have Cisco that's going to be reporting. A tech company that has been around forever through the dot-com bubble, that had all their growth then. It's kind of like been more or less a value stock at this point, but also a pretty decent one to watch out for. TJX, TJ Maxx, Marshalls, the retail side of things is certainly going to be interesting, especially because we've been seeing an interesting trend with same store sales. I'd be curious to see what TJX has to say about revenue within their stores versus digitally. We saw Shopify and Amazon talk about how they were seeing a slowing of growth on the e-commerce side of things. And there's some theories out there that this has a lot to do with people just wanting to go back out and try things on and not have to worry about sending things back and all of that. So could we see some more of that theme roll through TJX? We'll find out that on Wednesday before the market opens. But I think that one's certainly one worth watching for. Bed Bath, Bath and Body Works. That's another one to watch out for. We have Lightspeed, Kohl's, BJ's pre-market on Thursday. That I think is also going to be very interesting. And one that I probably should have put on here, and I didn't, was Palo Alto. Palo Alto Networks, the cybersecurity space went absolutely ape shit. And the multiples on Palo Alto and CrowdStrike, a lot of the other cybersecurity plays is sky high. The fact of the matter is, though, is that the demand for those are still ridiculous. And cybersecurity isn't going anywhere, especially with the dynamics between Russia, Ukraine, and the threats that are there. So are investors going to be willing to pay a premium on those? Yes, I think that that's going to be a theme as well. So Palo Alto, that's going to be Thursday after hours, along with those Applied Materials. And then there's John Deere. So the Deere company has earnings on Friday before the market opens. I will not be reacting to those earnings, but if you guys join the Chaos Crew, we'll be reacting to those in our Discord. So make sure that you're hitting the join button next to subscribe, or the link is in the chat as well. If you guys want to become part of the Chaos Crew, click on that link and become a part of the great community of traders, beginners, veterans. We're all here, and it's a great community to be part of. So hit the join button next to subscribe, or again, like I said, the link is in the chat too. But Deere, I think, is definitely one to watch for when we're seeing, agriculture be front and center as far as, inflation and demand is concerned. Deere, I think, is going to continue to do extremely well too. So that's one that I think is worth keeping an eye on going into earnings. That'll be Friday before the market opens. There's a couple honorable mentions. Kind of wanted to see what you guys are talking about as well. There's about 100 of you guys hanging in the stream. If you guys wouldn't mind hitting that thumbs up as we are getting to some of these questions. And guys, if you have stocks that you that you're excited about watching this week, make sure you're putting them in the chat too. Would love to get your guys' thoughts on those. I appreciate a lot of the high praises from our Chaos Crew talking about the watch list and level 3. Loving it. Loving it. Alan says plywood's $30 a sheet. Is that true? I mean, I haven't bought plywood in a minute, but that's crazy. Absolutely crazy. Taking a look at some of the other comments here. Lots of likes about Take Two. I like Take Two if it comes with a good guidance. Alan says Take Two might be a great long run. Yeah, I think so. Long run for sure. Jeff Bonica said, I turned from beer to scotch and vodka. I'm conserving on wheat and grains because of coming in the shortages. Well, listen, man, Jeff, I hate to break it to you, bro, but they use corn for whiskey and vodka. Vodka, they use potatoes and corn. They're interchangeable, but corn's going up too. Hate to be the bearer of bad news. But you're gonna get got one way or the other. I appreciate the over under. I'm thinking about, I'll do one over under just because Oliver Thorpe brought it up, but we'll do Etsy in a second. But the over under segment we're going to keep for Monday through Thursday. That's fluid. I may change it. It may be an everyday thing, but I think for right now, it's just going to stick with the Tuesday or the Monday through Thursday streams. But I appreciate that. I'll do Etsy here in a second. And what do you think about PayPal right now? Says Daddy David. Is it DeQuavi? DeQuavi? I'm probably butchered your name. I'm sorry about this. But what do you think about PayPal? You know what the crazy part about PayPal is that given how much this has moved down, and I'll share my screen with you, and we can look at the chart on PayPal. Oops. But PayPal still, is finally getting down to a point to where it actually has a reasonable multiple. And it's down at 20 times next year's earnings, which is almost in line with what the overall S&P is right now. And we saw a pretty decent bounce over the last couple of days at $71.83, around $72. That's where it closed at on Friday. We've seen a couple of bounces already. We saw a nice little bounce going into earnings 2 quarters ago, and obviously had a tremendous gap down on disappointing earnings. Back in December or November, it also had a crazy gap down because of poor guidance on earnings and growth. And really, the most recent quarter wasn't fantastic. It was better than the other two. I think that we could start seeing an opportunity here for PayPal. You know what the crazy part about this is too? Is that PayPal is lower than what it was pre-pandemic, and it actually is lower than the pandemic lows. So this, in my opinion, is an absolute buy. And again, my opinion, I'm not telling you to go out and buy it, but this seems to be at a point now to where it is absolutely ridiculous to see the price at where it's at right now. Again, as I was talking about earlier in the stream, there's a lot of these tech companies that are getting comped. The comparisons are to 2020 and 2021 levels. We're just not going to see that kind of growth. I mean, we're going to see some growth, and we're going to see reasonable growth. The reasonable growth we saw in 2019 and 2018 and previously, but we're not going to see what we saw in the pandemic. I mean, PayPal was a huge benefactor of people staying at home. I refrain from saying that they were benefiting from COVID, but they were benefiting from people staying at home and not wanting to come out of their houses because they were buying things through PayPal. And so now it's come down to a point to where I think it's just absolutely crazy. I think it's crazy, and I think it is ridiculously undervalued. Can it go lower? Absolutely. It can go lower, right? A lot of these stocks can, even though they've been beaten down. But the risk reward here is certainly good. And I think it's worth taking a risk on, especially if you have a longer time horizon. You know, even if it's, I mean, I have to say, like, I would be shocked if PayPal wasn't higher a year from now. Absolutely shocked if it wasn't higher than a year from now. So, anyways, that's my thoughts on PayPal. Oliver, you asked about Etsy. I think Etsy is certainly one that has obviously gotten beaten down and has been just absolutely murdered. This has still got a forward PE, though, of 36 times, believe it or not, next year's earnings. So I'm pretty high valuation still, but this is a growth stock, and this is a company that still reports for profit. They're operating for profit. The growth obviously has slowed down significantly. Didn't have great reaction to earnings last time around because none of the e-commerce platforms did. But I do think that Etsy has the opportunity, or this is an opportunity for Etsy now at this point to maybe take a shot at it. Again, kind of like my thoughts on PayPal. We're getting to a point to where I think this is starting to get to where the risk reward is just too good. This isn't anywhere near where it was during the pandemic lows at $29.95. So not quite the similar situation that we're seeing with PayPal and the overselling that's going on there. But the growth story is certainly there. And I think like I was saying earlier, that once we start comparing this, like we get into 2023 and start comparing to what it was doing in 2022, I think Etsy does grow from there. And I think people are going to start warming back up to it. So we can see some more volatility with this. It can go lower, but I think that there's a lot of opportunity here as well. And risk reward wise, I think it's obviously much better than where it was at $300. It's just so crazy how quickly all this came down. It was trading at 307.75 cents in November of last year. Not that long ago, 6 months ago, it was trading at $307.75. Just closed Friday at 92.08 and was even lower than that at 75.61. Absolutely mind-blowing. But this is the crazy part. It can go lower. So just consider that risk. But I think the risk is much lower now than what it was 3 months ago, right? So that's just the crazy part about it. But anyhow, over under on own the chaos. It is undervalued. Period. It's a steal. It's undervalued. Go buy it. Okay. All right, guys. So that's going to do it for today. Thanks so much for tuning in to Stockwatch Sunday. I'll be back in studio tomorrow, again, at 3:45 p.m. Eastern time. We're going to be reacting to those earnings from Take-Two Interactive, among other ones, a couple other things. Sundial, if you guys are interested in the cannabis play there, we actually saw some pretty decent numbers from Aurora Cannabis, even though I hate the stock and I hate the company with all the dilutive dilution that they have going on is absolutely atrocious. But hey, Sundial could see a little pop off of decent earnings. Wix also has earnings pre-market. We'll probably react to those. And I'm interested to see what Weber does as well. Their pre-market. Tencent also has earnings tomorrow. That's going to be an interesting one to watch too. So guys, hope to see you there. Hit the subscribe button, hit that notification bell to get notified when I do go live. And lastly, before you walk out the door, make sure you hit that join button next to subscribe or click the link in the chat as well. We'd love to have you guys as a part of the Chaos crew. And one final thing, I wanted to cover the poll results here. So it's still dead nuts down the middle here. 49% of you guys think that tomorrow we close in the green. 51% of you say we don't. Very interesting. I'll give you an update on futures right now. And right now the futures are looking, they're down, or no, I'm sorry, they're up 52 points. So actually cut in half from where the highs were in futures. Obviously anything can change because futures are so low in volume, but interesting developments here, guys. Would actually prefer if we saw a red open and then another crescendo like we saw on Friday. If you guys recall, things were a little bit bumpy there early morning, especially as far as futures were concerned. And we saw that crazy rip up. Last thing I want to see is this wild gap up before the market opens and then everything sells off. So I kind of hope they stay around these levels and the futures don't get it way ahead of themselves. But we will have to see. And it looks like you guys are split right down the middle. So, guys, thanks so much for tuning in. I'll see you guys tomorrow. I hope you enjoy the rest of your night. Have a good one.